Hi folks, Scott here, and this is the wrap for Tuesday, November 19th. So I thought it would be helpful to show you the results of fading gaps following two consecutive lower daily closes. If you look closely, you can hopefully see a lower close that followed a lower close that followed a 200-day high close, the highest close of the past 200 days. So two consecutive lower closes after a 200-day high close. Now, before I show you the results, I encourage you to ask yourself, what do you think? Is it more likely to lead to more profit taking and selling on the subsequent day? On a gap down, for example, is it more likely to result in more buyers? Be honest. Ask yourself. And there you go. Several things down here. One, a slight bias for gapping down on the subsequent day. So tomorrow slightly favors a gap down. However, by using end of day stops, it shows a very high probability of filling, if not in the morning, by the end of the day. So it has an 84% chance of filling, at least by historical standards, and it's made over 60% more in profits than losses. So average winner about 3 points. Average loser about 10 points. That's not good. So you can get some trend days developing. And they've had one monster loser, but even with that one monster loser, which is 28, 29 points, divide this number by 500 because this is about 10 contracts, $50 per point in the ES. It's still a wildly profitable strategy. So a good setup in general for looking for long opportunities. And shorts are neutral to weaker than average, so clearly a long bias. Now I will rerun these numbers for our members using our MTG stop parameters in the morning to confirm how volatile the open may be and whether or not this is tradable, but on the surface it certainly appears to favor a long bias. And of course, as always, I'll defer to our gap guides and worksheet before making my own final decision as it relates to tomorrow. But nonetheless, thought that was interesting and helpful. Hopefully you find the same. Let's look at today's scenarios. It was a pretty quiet day for me. Unfortunately, these gaps melted away. Odds actually favored a gap up big time, significantly from our worksheet. One of the many useful ways to use the data in our worksheet. This one is really an indirect use of what the data was intended for, but by looking at the average of all 8 indices and what the odds favor for different opening areas tomorrow, these are opening areas, really the different zones that are merged together to one of 4 core areas where a gap could occur tomorrow. You can add up you can back into the odds of where markets may open. So 3 systems, 8 markets, 10 years, you come up with, in this case, 2,600 similar, actually more like 4,500 total gaps, similar gaps, of which 57% have gapped up after such a scenario. That was going into today. So on average, you could have expected gaps to rally today. Had a great setup last night. I did not trade it. To be honest, I forgot to look last night. I had sort of a busy night. I've been trying to get things ready for the Vegas Expo. So. But I did hear from quite a few members that traded the gap long around yesterday's lows. I'll show you that in a moment, or overnight lows. And gap up or down was pretty good. We ended up with a small gap, tiny gap down in the ES, about 2 ticks. But I think all the other indices gapped up and looked pretty good overall. No unique day factors, and bearish outside day actually favored shorting an up gap more so than buying a down gap. My pre-market comments, they were posted just disclosing, I'm not perfect. I do work hard to get these things posted by 9:20 to 9:22 a.m. Eastern time, 90% of the days at least. Today was more like 9:25. I had a technical problem, a little glitch. Got it straightened out, but wasn't until 9:25 Eastern, so sorry about that. Good news there was it wasn't much of a gap, so you didn't miss much. Mostly positive data, a little bit mixed, but mostly positive for fading gaps after these other 2 unique patterns I commented on. And overall, just small gap size and mixed opening directions was the key. So I said I'd fade the gap in either direction of the open as long as it was at least 1 point size in the ES and all futures were gapping the same direction. And unfortunately that did not happen. We ended up with a small gap up in the Russell, small gap up in the wrong day, small gap up in the NASDAQ, sizable gap up in the Dow, and small gap down in the ES. So Nothing there for me. Data on the 15-minute and first hour range guides was fairly mixed. The closest edge there was to discovering one was the high fade of the, oh shoot, I don't have my numbers in front of me. I can't remember if it was a 15-minute or first hour data. For some reason I'm thinking it was a 15-minute data, and it rallied a little past that, which I was concerned or thought it might do with this price action. There was confluence right down here, bounced right off of underneath the lows. We did talk about that in the trading room. I did not trade it. Wasn't really set up the way I wanted to trade, but not surprising. And then market just fell apart basically into that confluence. Internals were somewhat weak, tested it once and finished weakly. So not much of a range day, only about a 10-point range. I did no trades whatsoever. I just didn't have any high probability trades that set up and met my criteria. So, whoops. There's the Dow. The setup and met my criteria for the day. So I'm going to keep this short, and that's all I've got for the day. And there'll be no video wraps the rest of the week. We'll be posting my pre-market comments, which will continue basically per normal. And you'll get the daily tip, etc. in the daily video, just no video. So just a heads up, they'll resume per normal on Monday. Take care.